Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly premium video. This one is on the Ethereum dominance. And then, of course, we'll talk about the standard charts that we go through every single week. So let's go ahead and jump in. So we discussed back in 2019, 2020 that Ethereum is likely making this long-term momentum shift against Bitcoin that will likely last for many years to come. Okay. And since about the middle of 2019, the dominance has been slowly and steadily moving up, right, for Ethereum. Now, this is showing the 7-day moving average for Ethereum. That way it drowns out a little bit of the noise. But this is what you get, right? And the whole idea is, look, this is a train that we're more or less riding. And this is why for a couple of months, for a lot of October and November, I was putting 70% of my weekly DCA into ETH. It's also, of course, why I was heavily accumulating it back in 2019 and 2020 as well, because I would generally expect it to go up. Now, I know a lot of people are saying, well, why don't you just go 100% ETH if you think it's going to outperform Bitcoin? Well, we'll talk about that a little bit more later. But I mean, it basically boils down to managing your risk and whatnot. But there's also, I'm going to show you guys a table as well about where Bitcoin is below the 20-week, above the 20-week, and what Ethereum is doing. So this is the Ethereum dominance, the 7-day moving average. Now, if we also show this is the Ethereum dominance as measured against the total market cap and the altcoin market cap. All right. So against the total market cap, red, dominance versus total market cap is blue versus the altcoin market cap, it's red. And so not only is Ethereum going up with respect to, say, the entire asset class, which would include Bitcoin, but it's also going up against altcoins. Okay. And this is what we've been saying all along. A lot of people say, well, altcoins outperform Ethereum. Look, Ethereum's actually going to outperform probably a majority of altcoins. Okay, it's hard knowing which ones that are going to outperform it. Of course, we try to speculate on which ones might outperform it. But Ethereum is a blue chip. It is a relatively safe play compared to a lot of altcoins out there. And it does more so protect you from the downside risk. Not as good as Bitcoin does, but better than some of the altcoins. Okay, so it is moving up not only against Bitcoin, but it's also moving up against altcoins as well. Now, if you look at the Ethereum dominance versus the Bitcoin dominance, the Ethereum dominance once upon a time went all the way up to over 30%. And then the Bitcoin dominance has basically just been slowly decreasing. I mean, it's gone through phases where it goes up, of course, right? I mean, it went up during during the 2018 bear market. It also went up in prior bear markets as well. That's not fully shown on this chart. Ethereum went down during the bear market, right? The Ethereum dominance. Ethereum dominance went down during the bear market. Bitcoin dominance went up during the bear market. But now, during this market cycle, since the bull market started, the Ethereum dominance has been moving up. The Bitcoin dominance has been moving down. Okay. Now, there still are phases where the Bitcoin dominance goes up. Of course, we saw in 2019. We saw at the end of 2020. There are still phases where it goes up. But over the macro scale, you can see that the Bitcoin dominance is going down. The Ethereum dominance, you can't just say it's macro going up because we don't know yet. I mean, it once upon a time went to 30%. It would make it it would be somewhat challenging for Ethereum to make it to 30% dominance these days because of all the, all the other cryptocurrencies out there that money's pouring into. But it does show the general trend of the cycle. Now, this shows the Ethereum dominance in blue and the Ethereum Bitcoin valuation in red. And so they're basically more or less tracking one-to-one, which of course makes sense. But I think it's not always intuitive given the fact that the Ethereum dominance is not just against Bitcoin, it's also with respect to altcoins as well. Now, this is an interesting chart. It shows the Ethereum dominance color code by the Bitcoin risk, okay? And note that a lot of times when the Bitcoin risk is highest, like the end of 2017, like in early to mid 2021, following when the Bitcoin risk is highest, you usually get a nice push to the upside by the Ethereum dominance. Okay, we saw that happen back in 2018. We saw it happen in 2021. In 2018, after that quick move to the upside, we then entered that bear market in which we went down pretty quickly. This time, it's more or less just been moving sideways, off and on. Okay, I mean, it hasn't been straight up. It hasn't been straight down. It's more or less just been going sideways for the last several months. This one color codes the Ethereum dominance, color coded by the Ethereum risk. Okay, and again, Ethereum risk was highest back in mid 2017. The Ethereum dominance was also the highest. This is where we are today. So we're nowhere near these levels. I don't expect Ethereum to make it to the 0.9 to 1 risk band again. I would say the market cycle peak or even local tops, as we saw the last local top made it to the 0.7 to 0.8 risk band. I would assume local tops are somewhere between 0.7 to 0.9. Okay, generally speaking, if it makes it to 0.8 to 0.9, high probability that's a market cycle top. But like with Bitcoin, you have to assume that one below it could also be. So with Bitcoin, I think it can make it to 0.9 to 1 risk again. It made it there earlier this year. But you also have to assume that a future one could also peak out one risk band below that one. And this is why dynamic DCAing out of the market, I think, is the best way to go. Now, the reason, some people might say, well, why don't you just go 100% ETH? Well, for a couple weeks, or a couple months, I should say, I was putting 70% of my weekly DCA into ETH, but I still have a fairly large Bitcoin position. And one of the things to consider, we've shown this table many times. I basically show it anytime we have a weekly close for the first time above the 20 week or below the 20 week when there's a change in it. And the whole idea is that anytime you get a weekly close above the 20 week moving average, most of the time, Ethereum outperforms Bitcoin until Bitcoin drops below the 20 week moving average on the weekly time frame. It's worked 6 out of 7 times now. Okay, I mean, it was 5 out of 6, now it's 6 out of 7. And I mean, just to give you an idea, on August 16th, 2021, we had the break up on the weekly time frame, and then the breakdown was the most recent weekly close. Bitcoin during that time went up 5%. Ethereum during that time went up 33%. Okay, but the same thing also applies to the downside, except with more accuracy. When we break below it until we break back above, Ethereum tends to underperform Bitcoin. Now, you might say, well, does that mean you should just completely forsake Ethereum? No, I don't think so. I mean, I think that it just goes to show you why managing your risk is important and not betting the entire family farm on what, because it's so hard to predict what these things are going to do in the short term. Especially if Bitcoin gets back above the 20 week or something in the relatively short period of time, then it might not make a huge difference. But I would not stop DCAing Bitcoin or Ethereum in this recent pullback. I mean, I will continue to DCA them. But I will DCA both of them. And I still will DCA more Bitcoin than ETH, at least for now. Do remember, though, that the last couple of months, up until the last 2-3 weeks, when Bitcoin finally came back down below 0.5 risk, I was mostly focusing on Ethereum accumulation. 70% of my weekly DCA was going to Ethereum. So it's not like I'm light on Ethereum or anything like that. But I did want to show this chart, and you can go through each one and see, it broke this first one. It broke below or broke down, and then by the time it broke up, Bitcoin had gone up 4%, Ethereum had dropped 10%. And you can go through each one. So manage your risk accordingly, okay? Don't assume that Ethereum has to just constantly outperform Bitcoin monotonically for the entire cycle, because it won't, right? There will be phases where Bitcoin will still outperform Ethereum. But I do understand why there are people that are heavier Ethereum than Bitcoin. Okay, so if you 1 and 2 should be Bitcoin and Ethereum, but if you don't have Bitcoin at number 1, I think it's just because you would have Ethereum at number 1 and not Bitcoin. Everything else, all the altcoins are much riskier plays, so do keep that in mind. Okay, with that said, let's go over to the charts. All right, so obviously, as you guys know, Bitcoin dropped below the bull market support band. The 20-week SMA is now at 52.3K. The 21-week EMA is at 52.1K. So more or less, the bull market support band is at around $52,000. Now, there was a time in history where we dropped below it, and then we got back above it the following week. So we will at least keep an eye out for that to see if that happens. But mentally, we also need to know that, that of course there could be another lull here. We could be back in the sandbox if that doesn't happen. So what I'm watching is the 50-week. The 50 weeks at 47.4. But even then, we still have, and we've shown the fair value before. Clearly, that is something for us to watch. We know that historically speaking, as long as we're holding it, then we tend to be doing relatively well, at least in terms of the grand scheme of the cycle. If we break it, we're going into long accumulation. Okay, here we held it, we continued higher. If we break it, long accumulation. Here we broke it, long accumulation. Here we held it. Right here we held it. We continued on. So as long as we stay above that, I think you could still easily make the case that the market cycle is still theoretically intact. As crazy as it might seem, I know a lot of people are skeptical, fearful. And look, this is one of the reasons why I mostly focus on the blue chips, why I'm heavier Bitcoin and Ethereum. Some altcoins are down a lot recently. And I mean, it does go to show why being heavy in some of the blue chips can help protect you against the downside. With that said, that it's not like the dominance of Bitcoin is that high, but certainly Ethereum has been sort of saving my portfolio in recent times. It's still at 41.52, so it's not like it's doing all that bad. But just to cover our bases, let's go through a lot of the different metrics here. So we can also go look at the corridor that we followed as well, just to see kind of where that is. What are the bounds that it's currently giving? It currently ranges from around 33.7K up to 128.3K. But it is a function of the 20-week moving average. The 20-week moving average is still moving higher. Therefore, the corridor is still slowly moving higher. Okay, so that's what it looks like. We created this metric somewhere back over here and did a pretty good job right here. Currently, this one is still moving up, and it'll probably continue to moving up at least for another 1 or 2 weeks or so. But if we go look at Ethereum, okay, Ethereum is actually still above its bull market support band. But we do also know that if you go back to, let's go back to say Bitcoin really quick. So Bitcoin dropped below the bull market support band May 10th, or at least dropped below the 20-week May 10th. And then the following week, it fell completely through. Ethereum came down to the bull market support band, but actually held it for a while and only later briefly went below it before ultimately staying above it. Ethereum is still above its bull market support band. Okay, so I mean, Ethereum is still looking relatively strong given the circumstances. But you should know that if Bitcoin is unable to get back above the 20-week SMA, and if it continues to go down and we go into another lull phase, then Ethereum will likely bleed against Bitcoin, just like we saw Ethereum bleed against Bitcoin during this phase over here. So that's the reason why I don't think making, going 100% ETH makes sense, because you want to manage your risk accordingly in the event of a sustained pullback. Okay, but with that said, Ethereum was at these prices last week. It was at these prices the week before. We're currently at prices above the highest weekly close that we saw earlier in the year in May. Obviously not recently, but back in May, we're still above those levels. Ethereum still looks relatively good. I would argue that this is still long reaccumulation for Ethereum, even if in the short term, it doesn't really seem like it. Okay, so I know a lot of people are fearful. We have said many times before that these sideways phases can last upwards of a year. Okay, and I mean, it has. I mean, we're going on 2/3 of a year at this point with Ethereum more or less at these prices. So, I mean, it goes to show that you don't really have to have an immediate breakout to the upside, okay? If we go draw the line at the prior highest weekly closes, right here, before the most recent ones, we're still holding above. So I don't think there's a whole lot to be upset about right now with Ethereum. It's still holding its own relatively well. Now, the reason we talk about this is because, look, Ethereum's well above its bull market support band, and the total crypto market cap still had a weekly close above its bull market support band, which might be somewhat interesting to follow as well, because it also held the line when we tested it back over here in September. It also had a drop below earlier in the cycle. Back May 17th, we dropped below. So far, it has in fact held the line. So that is at least something that we should watch. If you're curious where the 20-week SMA is for the total cryptocurrency market capitalization, it's now at 2.278 trillion, and the 21-week EMA is at 2.252 trillion. Right now, we are slightly below at 2.245 trillion, if you round it. So I think an interesting metric to follow. If we go to the dashboard, the risk level on Bitcoin right now is 0.418. Okay, so it's not super high, considering, obviously considering the circumstances, we just dropped down full risk band. We actually went all the way down during that pullback that we just saw to about 0.36 risk. Okay, so we did actually go back down to the 0.3 to 0.4 risk band. And if we spend a while here, if we do end up spending weeks at this level, these risk levels are just going to keep trickling up corresponding to the prices, meaning that even this price could one day be in the 0.3 to 0.4 risk band. So we'll take it 1 week at a time. If you go look, if you scroll down, we actually added something here, the flippening tracker. I know a lot of people have mixed feelings about Ethereum flipping Bitcoin, and there's a whole theoretical debate about it. Some people think it's ridiculous. Some people think it's bound to happen. Regardless of what you think, if you want to follow it, it's down here now. You can see it shows the Bitcoin market cap, Ethereum's market cap, the flippening tracker. It's currently at 53.2%. If this goes over 100%, it means that Ethereum has in fact flipped Bitcoin. Okay, so we're continuing to add new stuff, and you'll continue to see things be developed through the weeks and the years. Okay, so over the last month, if we look at the ones that have performed the best, Avalanche is still up 12.5%. I mean, it's at $83, $84, but again, it's still up 12.5%. Matic, this is what I've been talking about a lot recently. I do think Matic is a solid project. I think if Ethereum's going up, there's a good chance Matic's going to go up with it. They're both focusing on rollups, and I think that is technology that ultimately will prevail. So I'd say Matic still looks relatively good, trading just below $2. So even if you've been buying that one over the last several weeks, you're probably still looking pretty good. And as you can see on the risk dashboard, Matic is still up marginally on the month. Even on the week, it's still up 18%, even with the massive dump, which is somewhat incredible if you think about it. And then Luna is up 30%. And I actually do have a relatively small position in Luna. I picked it up, a month or two ago. I've been pleasantly surprised with how that one has performed. It's currently at around $65. Okay, so my weekly DCAs now are still 50% Bitcoin, or sorry, it was 60% Bitcoin. Now it's 50% Bitcoin, 40% ETH, 10% alts. I wouldn't mind increasing my altcoin accumulation, but I'd like to wait a little bit to see what Bitcoin does here. I don't really mind missing local bottoms for altcoins. I know a lot of people want to get those bottoms, and if there's an altcoin you really want to get, by all means DCA. I mean, I'm still DCAing altcoins. It's just 10% of my weekly DCA goes to altcoins. I just want to minimize my downside risk in the event of a longer pullback. So I'm going to do 50% Bitcoin, 40% ETH, 10% alts. That's what I'm going to be doing for at least a little while. And look, if Bitcoin is able to recover, then I'll probably increase the altcoin accumulation. Okay, so that's sort of what I'm looking at right now. Obviously, I've mainly been accumulating Bitcoin and Ethereum. The other one is Matic. I've been talking a lot about that one recently. If we go look at the dashboard, some other coins that you guys know I like ADA, I like DOT, I like Avalanche. I haven't been buying Link in a long time. It's still bleeding against Ethereum, so I'm just not interested in it. Not anytime soon. Solana, I mean, I honestly have mixed feelings about because it is a lot more centralized, but the performance of it has been relatively good. I do have a small position in it. It's probably going to continue to trend up with the duration of the market cycle. But the risk on it right now is still relatively high. So it's still in the 0.6 risk band, but the risk confidence is relatively low. Note that Matic is still below 0.4 risk again after this most recent pullback. Some of these other projects, a lot of them just keep bleeding against Ethereum. Just to show you, Aave is one I've mentioned before. We check on it every week. Nope, still bleeding against Ethereum. I'm not interested in establishing a position in this one. It just keeps going down against Ethereum. With that said, I have to imagine that at some point in the not so distant future, we're going to get hit to historic lows of some of these coins against Ethereum. So like VeChain is one we followed in the past. Usually it bounces in this lower region, but we're still not even there yet. At the very bottom, it still could theoretically drop another 20% or so to get to that historic bottom. So, if we see something like that transpire, where let's say Ethereum drags the whole asset class up with it, Bitcoin gets back above the bull market support band, alts are still bleeding against ETH. If all of them are going to historic lows, like if VeChain ETH is going to historic lows, if ADA ETH is going to historic lows, like back down here, if DOT ETH, if they're going to historic lows as well, then you could easily argue that, all right, maybe I'll increase my altcoin accumulation from 10% to like 20% or something. Okay, you can see that DOT is actually getting there. I mean, it hasn't actually been much lower than this in the past. Okay, so I mean, I'm still DCAing DOT. The lowest it's ever been against Ethereum, it would need to drop another 9%. Okay, for DOT. So what I'm showing basically is, look, a lot of these altcoins are getting to relatively historic lows against Ethereum. You really want to identify the oscillators versus the bleeders. I hope DOT is an oscillator. Okay, it looks like an oscillator so far, but it's only been up to this upper band once. We'd like to see it go back up to that upper band as well. Okay, so look, for me, 50% Bitcoin, 40% ETH, 10% alts, and you guys know which coins I'm DCing. I've mentioned them every single week, off and on. Sometimes I pick up more Matic, sometimes I pick up a little bit more DOT, but you guys know these coins. These are the coins I like. Avalanche is another good coin. ADA has been taking a huge beating. We said it's probably going to dump after the launch of smart contracts. It has dumped significantly, obviously now with Bitcoin not holding the bull market support band. Right now it's at 137. The risk is below 0.3. I still think it's a relatively good project, considering considering the circumstances where there's really no ecosystem on it, considering that Bitcoin's below the bull market support band. the risk on it right now at 0.288 is relatively low. Doesn't mean it can't go below it. I mean, these are risk levels, and there still technically is lower risk bands for all these cryptocurrencies against their USD pairs. But we have Sunday Swap launching, the testnet. In fact, today I believe. We'll see where that takes us. I mean, I'm not holding my breath in the short term that the whole entire ecosystem is going to start booming, but I do think that they will figure their stuff out, and eventually some of the gears will be turning on it, which is why I still have ADA. You could easily argue that it is an oscillator against Ethereum, even if in the short term it has gone down. Okay, even if in the short term it has gone down, I still feel like it'd be somewhat hard to dispute that it's just a bleeder, considering that we've gone up many times against Ethereum. And I don't see why this one necessarily has to be any different. Okay, so I would argue that ADA is probably more likely to be an oscillator, not a bleeder, even if in the short term it has bled against Ethereum. That covers a lot of the charts. The S&P is certainly something we're going to want to follow as well. Back at the 20-week moving average, as you can see over here, we had a dump back over here in September. We actually held the line. I bought the dip because the risk metric called for it. It was below 0.5 risk. If you go to stocks, we're actually below, or 0.75. It was below 0.75 risk. We're below 0.75 risk again. We're at 0.748, but note that the price is higher. So what was previously the prior top is now sort of like a fear and FUD price for the S&P, for SPY, the SPY. So just a little bit of perspective. So I'm continuing to buy some stocks and index funds on this dip. I generally operate with the assumptions that the stock market will trend up with time. Okay, people are going to call for major bear markets, major recessions, depressions. They're going to call for it forever. They're usually going to be wrong. I think it's much more better for your portfolio just to assume the market trends up with time, rather like this, right? Rather than to assume that we're going to have a 10 or 20 year phase in the market where it doesn't do anything but go down or go sideways. Okay, I think it's generally better to assume that it will trend up with time. This is my assumption, even if some people might consider it somewhat ignorant, but this is my assumption, and it's been working out relatively well for quite a long period of time. That covers most of what we want to talk about. Obviously, we can go back and look at the charts and see where we are on the market cycle ROI. We still have unofficially lengthened. We need to put a new all-time high to do so. Still looks like a fairly normal market cycle to me. Of course, the next few weeks will be very telling as to the health of the market. Can we recover? Can we stay above 40K, which is where we held the line back in September? I think that's pretty important. Can we get back above the bull market support band? That's also pretty important. So a lot of things to cover over the next few weeks, and it'll be really interesting to see what Bitcoin does. Some of the other charts, of course, you can always pull up the risk chart. This is the one that has on the secondary y-axis. You can see that despite the fact that we're still at prices higher than we were back in September, the risk level is about the same because the market has sort of adjusted slightly to these prices. So you can see that the risk level is more or less the same than it was back then. That's more or less it. I think that basically covers where we are. We can go look at the Ethereum market cycle ROI and see that, it doesn't really look like much of anything, right? It's more or less sideways movement, which is kind of crazy considering what happened. But business as usual for Ethereum. Hopefully you guys like the content. Leave some comments down below if you have any questions. We'll try to get those answered. Thank you for tuning in. I'll see you next time. Bye.